Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, Fed officials signal just one interest rate cut before the end of 2024, as well as that the EU to hit Chinese electric cars with tariffs of up to 48%. We've got lots to talk about on the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is to do with Fed officials. Now, the Fed has now signaled that they expect to cut interest rates only once this year. This comes in a new statement by the Fed following their latest interest rate decision to hold interest rates at their current multi-decade high of 5.25% to 5.5%. Now, of course, this interest rate decision, this kind of press conference, CPI figure release, this was all highly anticipated. It's really been the talk of the town for the entirety of this week leading up to this point. As of course, ever since the weekly market briefing to start of the week and throughout all the morning market briefings previous to this, but throughout this week, ultimately we've been talking about this meeting, we've been talking about this interest rate decision, and ultimately highlighting the kind of significance of not only having its federal interest rate decision taking place in the press conference, which obviously follows, but obviously also the inflation figure, which was to come out just before this interest rate decision and then press conference. As ultimately, we knew that many Fed officials were kind of on the fence of whether there should be one interest rate cut this year or two interest rate cuts this year, and this led to many investors and traders also being quite on the fence. Ultimately, though, most traders were still on the fence of expecting only one interest rate cut this year as a result of kind of the Fed's very hawkish rhetoric and kind of signs of very persistent inflation within the US economy. But ultimately, many were still on the fence, and this inflation figure was kind of a way for traders to kind of get a glimpse into what the Fed might say before the Fed of course says it, and that was creating this kind of tension within the market, where the market was quite literally trading sideways for points of time as individuals were waiting for this key data to be released. And most certainly this data did not disappoint, nor did what Powell did say in the press conference following. Now, the inflation figure in fact came in below expectations, coming in at 3.3%, I believe, whilst the expectations was 3.4%. So inflation did prove itself to be below what economists were expecting, and did prove itself to be on the decline somewhat. And of course, that kind of sent those very dovish shockwaves through the market, and as a result of that, we started to see certain things play out within the dollar scene, as well as US indices, with US indices beginning their rally to the upside whilst the dollar sold off significantly. Of course, we'll come onto this more so on the charts, so wait around so you can see our analysis then. This is more so talking about the actual topic itself. So yeah, we saw those US indices rise to the upside. We saw the dollar sell off significantly as investors and traders started to expect, of course, some more dovish rhetoric and more dovish monetary policy from the Fed. So as a result of that, many probably started to expect a definite interest rate cut within in September, and we have the data on that with 80% within the swap market expecting that September rate cut. So that kind of soon rate cut. Ultimately that's changed, but we'll get into that in just a second. So yeah, that kind of inflation rate figure did create that kind of dovish shockwave. But what followed really is what created a great deal of market volatility, or a great deal of market confusion. As of course the Fed then made their own interest rate decision, which was completely expected to keep interest rates at this kind of multi-decade high. What really surprised investors and traders though was when Powell came out to speak in the press conference following, just as he usually would. But what he said kind kind of took those traders by surprise, with his comments being far more hawkish than what people were expecting after that inflation rate figure, with Powell kind of making this very hawkish outlook on the kind of inflation perspective very, very clear, with him kind of saying that there was only going to be one interest rate cut this year, or at least projecting only one interest rate cut this year, which was kind of contrary to what investors were starting to believe after that most recent, or yesterday's inflation rate figure release. So that's why we started to see a great deal of kind of market fallout following that kind of comment. As we'll get into in this article, though, that isn't the kind of full story, and Powell then did, of course, note some interesting things which may, of course, need to be noted and understood, as ultimately things may not be as clear as they do seem, with this move being overwhelmingly hawkish with regards to inflation, considering their own previous expectation to cut interest rates 3 times this year. And of course, that was the expectation at the start of the year by the Fed, and of course now the Fed is only expecting 1 interest rate cut. So that's the kind of hawkish messages from the Fed right there, following of course the very dovish CPI figure. So now you're starting to understand why we're seeing this kind of contradiction within the market. Further than that, most traders had priced in 2 rate cuts this year before Powell made his comments on the situation for the economy and inflation. So that divergence is of course very important to always note. Ultimately, the Fed comments and FOMC prediction highlighted their own continuing concerns that inflation remains above the Fed's own 2% target. Despite that, the fact that the CPI figure for the US did come in just before the Fed's interest rate decision and press conference, with the figure showing inflation was back on the decline and was only at 3.3% compared to previous predictions of 3.4%. This led Powell in the press conference to note that the inflation figure was encouraging, but ultimately downplayed the FOMC's forecast for inflation. Interestingly, Powell did note, that 15 I've misspelt this completely. 15 of the 19 FOMC members back to either 1 or 2 cuts, with this making both options still plausible. And that's the kind of key piece of information that I actually wanted to kind of notify you guys of, as that's the very interesting thing to think about here, is whilst Powell is kind of talking about this 1 interest rate cut, 15 of the 19 FOMC members still think that 1 or 2 rate cuts this year is on the table, which makes both options plausible, most certainly. So that is something that I think is very important to kind of consider and keep on your mind. The initial inflation figure release sent stocks higher. However, Powell's comments in the later press conference caused traders to pull back on their interest rate cut expectations. Now traders expect the first cut as soon as September, with the swap markets pricing in the probability of such a move at 64%, which is down from 80% before the conference. So a very interesting article there on an overwhelmingly important topic, and we have dedicated slightly more time to this topic, of course, than we usually might to our first article, but I felt it was so important, since this is kind of the most important piece of information that we're going to get this week and has greatly affected markets and will over the course of today and tomorrow. So definitely keep your eyes on this topic and keep what I've said in your mind. That's all to talk about on this article, though. Next article to talk about is to do with Chinese EVs, which is of course another topic that we frequently cover, with it just being such a kind of important thing to understand in such a growing industry at the moment. Actually, stalling industry in some senses, growing in other senses, and that's why it's kind of been an important topic of conversation. But this is more so to do with trade, which of course has also been a very conflicted issue recently, with the EU now to impose extreme tariffs on Chinese EVs, with tariffs being as large as 50% on EVs exported from China. This comes in a new move by the European Commission to notify car makers that they will apply additional duties between 17% and 38% on imported Chinese EVs next month. Now, of course, we've kind of covered the same topic to do with the US, and this is kind of becoming an increasingly common action by these Western governments or Western kind of intergovernmental organizations in an effort to basically protect their own industries from the Chinese growth within the EV sector. As we do know that Tesla's had its own issues within the Chinese industry, and of course, China has a great deal of power within the production side of automobiles, and as a result of that has allowed for a strong, powerful growth within the EV sector. Now, why the EU has kind of got involved and started to impose tariffs, well, that's largely based around their own probe into anti-subsidy action by the CCP. So essentially what they're accusing the CCP of is subsidizing their kind of EV manufacturers, which are many of them are state owned. So as a result of that, the funding is going to come from the state anyway. But ultimately, they're accusing China of kind of using this anti-competition strategy to hurt other governments or other nations' industries. And we know that the EU has a massive automobile manufacturing industry, with Germany, of course, kind of stalling within the growth of that sector recently following COVID and that sort of thing. But ultimately, the kind of topic of EVs, that kind of being a kind of industry which many individuals are looking to the future with, despite it kind of stalling for now, that kind of interest and excitement is is looking not as promising when you start to then factor in maybe the more competitive manufacturers within China, which then may bring down the actual efforts made by domestic producers within the EU or US, and that's why we are starting to see these tariffs being introduced, and that's not even beginning to factor in the kind of geopolitical kind of implications and possible factors which are played into why these decisions are being made, and so this is a heavily political topic, to be honest, but ultimately will have wide-ranging economic effects, and that's why it's so important to, of course, note. But definitely keep this on your mind, not only for the world tensions aspect, but also for just the aspect of how this will affect economies around the world, especially the EU and Chinese, and ultimately how this will affect EV manufacturers, with new duties being applied on top of already existing 10% tariffs on all Chinese EVs. Some specific exporters, including BYD, which is the world's largest EV manufacturer, will be hit with additional individual tariffs of between 17 and 20%. Key European brands such as Mercedes and Renault, who export EVs made in China, will pay 21% tariff, whilst Tesla will pay an individually calculated duty rate. This is all following the EU's anti-subsidy investigation into Chinese EV makers, and the extent of the company's cooperation is what largely determines the tariff. With the Chinese state-owned group SAIC being subject to the 38% rate. So a very important article there to note. With some very significant, very large EV tariffs being, of course, implemented on certain Chinese EV manufacturers. So definitely keep your eyes on this topic as things do start to expand and become very significant. That's all to talk about on the charts, though. Very important to cover next, though, is, of course, the charts, where, like always, we're starting on the US 30, but I'll cut the waffle and get straight to it. And ultimately, yesterday's price action really kind of represented this very ranging motion. Now, of course, in yesterday's morning market briefing, we noted how price had made its way down and reacted to this lower level of liquidity, and therefore was kind of representing this ranging motion, with the kind of time that I recorded the video, of course, being around where price was sitting at this very kind of neutral point, in the middle of this range where not much had happened. And I noted how that was likely just because of the fact that we're receiving this very important inflation figure today, but yesterday it was tomorrow, and of course we were also going to be receiving, of course, the Fed's interest rate decision with their press conference, which is far more important just because of the circumstances. As a result of that, that's why, we're seeing this kind of trading sideways motion. Now, what happened during the day of all this important economic data? Well, ultimately, price once again spiked to the upside and reacted just as it did before with that 50% Fibonacci retracement level. So a very key level, price has interacted with it before, and that level also lines up with a very key liquidity zone, which of course price interacted with during that movement. And that's why we have now seen this sell-off take place. Now, what does this kind of sell-off mean? Well, it means that price is kind of, it means that traders are starting to factor in, possibly the more hawkish policy of the Fed. That said, whilst we could say that this is, traders factoring hawkish policy, if we look at where price actually is, it's sitting about where I recorded, yesterday's morning market briefing. So price actually, over the period of the most significant news, hasn't moved much. And why is that? Well, as I noted in the first article, we received two very conflicting messages. One was that, we're seeing inflation on the decline, as the CPI figure did indicate, but then the other was, Jerome Powell basically saying there's only going to be one rate cut, which is of course very hawkish, and that's why I think we're seeing not much movement for the US 30 and other US indices, apart from slight moves to the downside on the day. So we'll have to wait and see what does happen over today and tomorrow, but definitely look out for some key liquidity zones as things do progress. Next talk about though is the dollar, which has made some massive moves over the course of yesterday as a result, of course, of that, important economic data and news being released. Now, when I recorded yesterday's morning market briefing, price was sitting around or had just reacted to this key higher area of liquidity, and seemingly that area was the area used for where all the banks kind of got in their short positions, short hedges for the week or for the day, more like, when of course the decisions were being made by the Fed and the press conference was being engaged with and that kind of thing, and from that area price has now sold off significantly, or did sell off significantly as things did start off, as that was when we were receiving, of course, the CPI figure, which represented that very dovish image for the economy, and as a result of that, the dollar sold off greatly. Now, if we look at the candle, which represents when the Fed then started to speak about their own kind of outlook on the economy and what they were looking at with interest rates, which of course was Powell basically saying that there's only going to be one interest rate cut this year, we of course then saw the dollar kind of reclaim some of those losses made, with price moving back to the upside as a result of that. So that is kind of the price action that we have seen. Of course, we're now going to have to wait and see what does happen, what overpowers what, and whether traders price in 2 or 1 rate cut. Now, some pricing in has already happened, but I think it does take some time for things to settle, and then that's when we're going to see whether price can make its way back up to this higher area of liquidity or down to this lower level of liquidity around the minus 27.2%. Next talk about though is Euro USD, which I have to get through quickly, which ultimately during the period of the CPI figure and then Fed interest rate decision, we saw the CPI figure drive the Euro USD to the upside as the dollar did sell off, with price then bumping into and reacting to that 6180 Fibonacci retracement level and key liquidity zone, where of course then we heard Powell's own comments to do with kind of the state of the economy, inflation, that kind of thing, and that's why we then sold a sell-off in Euro USD as those bought back on the dollar following that kind of news, and that's kind of why we're now seeing this kind of movement take place. As a result, that price is kind of stuck within this key area of, this key range between two key areas of liquidity, and we'll have to wait and see what does happen now, as I assume key financial institutions have their kind of bets placed following such news, and as a result of price interacting with these key liquidity zones, and we'll have to wait and see now whether the bears can overpower the bulls or the bulls can overpower the bears. So we'll have to wait and see for that. Next talk about though is pound pound yen. Not too much to say on pound yen apart from the kind of interesting news that price is now holding above that 200 yens for a pound mark, and has just breached above these previous all-time high levels around the 200 yen for a pound mark. So very significant price action, but price hasn't fully breached it. It has just kind of peaked above and is staying below, just below. So we'll have to wait and see what does happen. But this area is, of course, a very key area of liquidity and resistance. Next to talk about, though, is Bitcoin, which, as a result of the kind of news today from the Fed, we saw a great deal of volatility on Bitcoin. Interestingly, though, price has remained above that kind of $66,000 for a Bitcoin base. So of course that's a very key area which price has remained above and actually kind of utilized following kind of ending off on Tuesday and then with the CPI figure. So interesting moves there made by Bitcoin. The question will be whether price can stay above that $66,000 Bitcoin level and whether price will now continue that swing to the upside that we're seeing earlier last week and that kind of thing. Next to talk about, though, is gold, which it made an interesting move because, of course, I noted this kind of 3820 Fibonacci retracement level and key liquidity zone as an area which I expected price to interact with during the kind of economic data release and all the news to do with the dollar and the Fed, basically. Ultimately, whilst price did react to a key Fibonacci retracement level, it wasn't that 3820, and instead price moved higher than that 3820 and reacted to the 50% as a result of the kind of data coming out and the mixed news. And as a result of that, price is now kind of on the sell-off motion, but we'll have to wait and see whether price can continue that kind of sell-off motion and move back down to those lower areas of price and down to the Fibonacci extension level on minus 27.2. Lastly to talk about, though, is oil. Not much to say on oil. Oil is kind of slowing down but still continuing this push to the upside and actually breached the $83 a barrel 0.5 level yesterday. So a very key area which price is now reclaiming. Lastly to talk about like always, though, is the economic calendar, as that's all to talk about in the charts. Not much data, though, today to talk about with on the economic calendar, with the Aussie unemployment rate figure being released, followed by some Chinese new yuan loans being released, and followed by that we're receiving the Eurozone's industrial production figure, and the most important figure of the day is the US producer price inflation figure. So make sure you're listening up for that. But that's all to talk about on the economic calendar, though. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.